Ladies and gentlemen, hi, my name is David. Thank you very much for coming by. Today, we're going to be talking about a whole bunch of stuff. We're going to be talking about Canadian homes, American homes. We're going to be talking about Goldman and Sachs and a little bit of the International Monetary Fund and tying it all together and where I see that this is all going to play itself out. You know, it's very hard to have a crystal ball and be able to tell the future, but they never say that everything repeats itself, but they say it often rhymes. And that's what we're looking for, is how can we position our family to make sure that we're in the best position before the crash and after the crash. I would argue that we're already in it. All right, let's get into some of this stuff today. Thank you very much for coming by. All right, you guys, if we jump into one of the first articles of the day, my friends, we're going to be taking in the Toronto Star. So this is up in Canada. There is some very, very confusing information that's coming. Canadian home prices will fall with fewer sales. Okay, you know, it doesn't take a genius to figure out that part, right? That they're expecting less homes right now. I mean, things are pretty bad. I think the devil is in the details here. So remember, I always say whoever writes the article generally has a bias or leaning that way. The Canadian Real Estate Association is doing their forecast. Notice that they said the number of properties trading hands, so the number of homes sold, could be different, right? 20% down from last year. Of course, it's going to be down from last year because last year was absolutely bananas, right? All-time records everywhere. Okay, but it says that sales will drop another 2.3%. So they're estimating the national average home price, what everybody is actually caring about, price, is forecast to rise by 4.7% by the end of the year and another small percentage next year. So one paragraph down, the outlook is down from CREA's forecast in June, where they're expecting a 14% decline in home prices, notice, and a 10.8% increase in prices. Okay, so the number of homes sold is not the most important piece of information because nobody actually cares about how many homes are sold, right? They want to know what the prices are because the prices is what affects people. So two interesting takeaways from that is not too long ago, about a few weeks ago, I made a video where I was showing CREA, and CREA had their numbers. CREA was stating that they expect home prices to go down only 0.5%. Today, they're making these predictions that home prices may go down 10%, for example, up 10%. How do we take in all this information? Because it's so mixed up. How do we look at that? Because on some articles, they're saying it hasn't gone down the prices. In other articles here, they're predicting a 14% decline. I have to answer you that I actually am wondering the same question. I always ask this question, how? It's kind of like the David Ruff question, how? This is the CPI numbers. How? How does that work? The bank is going to not give you a loan. Why? I want to know how and why almost to everything, because the devil's always in the details, right? If a deal doesn't fall through, how did that happen? We have to figure out at the bottom so this doesn't happen again. But I can tell you that I don't understand how they calculate these numbers because we get different pieces of information. The one thing that I would take away from this and I would learn myself is, do you notice even in their forecasts, they're expecting less homes to sell, but an increase in national price. So this is a takeaway, kind of like a life lesson. How can that be that less homes sell and the price goes up? Remember, they are looking at national averages, national. So the way that it always works in a recession, doesn't matter what country, is everybody is willing to downsize the price of their homes, a lot of foreclosures, and they move into small entry-level units, small condos, small apartments, right? So what happens is as more competition goes down to the bottom, then prices really go up on those units. So the higher the price, remember, the bigger they are, the harder they'll fall. The bigger the home, the bigger the price, the more they'll drop. But at the same time, those low price homes that everybody will be moving into will go up in price. So what you see is this squish. Okay. The top end homes come down and the bottom end homes go up. So the band that they trade within will get squashed. It doesn't matter. Almost any city, any country that you go to, that's what happens. So this is why we are seeing right now in the things that are nice in life. Like if you go to Home Depot and stuff, not a lot of renovations are happening. Costs are too high. The things that are the luxuries in life are getting squashed in price, but the essentials of life, like gas and food, they're going up in price. So two things can be true at the same time. Massive life lesson. Okay, you guys, let's move on to the next article here. This is from CBC. Please look up this article. Real estate slowdown continues with an average price down 22% since February. The average home in Canada, this is the first paragraph. The average price of a Canadian home sold in August was $637,000, a number that has fallen more than 20% since February. Yet if we go over to the article that we just looked at before, you guys, in the Star, it says that the Canadian Real Estate Association guesses that the prices will go up. So how can we wrap our brains around that, right? How can we see that the Canadian Real Estate Association is saying all the home prices are going to go up, but the prices are actually falling? This is where we have to put our big boy pants on and, you know, our thinking hat and try to figure out what these answers are for ourselves. And we're all adults here. We could look around and see what's happening in our neighborhoods with our friends. You know, we just had one of our clients telling us that his home, his personal home, has gone up by a payment of $2,200 a month. So where I live, you could rent an apartment for that or a condo. That's just the price difference that has gone up with the new interest rates, which is really dangerous, right? These prices cannot stay this high without having a lot of damage, which brings us to another point. Things don't happen quickly. I call them sticky categories. So I want you just to imagine one thing for me. Say that you were making $50,000 a year and you were continuing on in your life and everything was great. Your boss said you've been doing a great job. I would like to increase your pay by $5,000 a year. So this would be really good for you. You could go buy some extra food. You might be able to go on a vacation with that extra wage. Remember, it's not one shot. They're going to be paying you this to you through the year. So as that happens, then what? It takes a while. Normally, a bank needs 2 years of bank returns before they'll lend you against your new salary. It takes a while for that money and the difference to actually manifest itself in your life, maybe to better food, better house, better car, whatever it is. It takes time for that to build up. At the same time, if you were living at 50,000 and your boss gave you a cut down to 45,000, would that mean the next day your home, you would sell your home, you'd sell your car? No, it takes some time for that to happen. The interest rates are the exact same way. When the interest rates go up as fast as they have, they will systematically every month be burning people out with bankruptcies or whatever. They're going to be going into debt, into debt, into debt. Now, we don't have a crystal ball. We don't know the exact date, but we definitely are in the season where everyone is going to get in big trouble. So if we just have to think back in 2020 when it started, they printed so much money that there was such an increase in prices. It actually really took off about a year after they printed that much money. Remember, there's a delay. Same thing is when these rates have gone up so much, there's going to be a delay before everybody runs out of money. The biggest changes in the market will be coming later. All right, let's jump back into the next article, you guys. I wanted to show you the difference between the Canadian Real Estate Association. Unbelievable. Now, all of this is starting from the U.S. Look at two of the world's greatest economists disagree. Now, normally, if I see an article of two economists that are talking, I actually don't want to pay attention to it. But the reason that this was interesting to me was who were the economists that were in the discussion. So Goldman and Sachs chief economist, Oliver Blanchard, who besides serving as the International Monetary Fund's chief economist from 08 to 15, was an early voice with the Treasury Secretary. Yeah. But listen, Goldman and Sachs, no little deal. International Monetary Fund, no, no little deal. This is like some serious people, right? So I want to pay attention to that. But look, one side says the Federal Reserve will be forced to raise interest rates until employment rate hits 6% if it wants to control inflation. Notice what that means. It means that we have to get people to lose their jobs. Notice the title. This is on fortune.com. Two of the world's greatest economists disagree on whether you have to lose your job or not to bring down inflation. I need you to remember that we did a video earlier in the week when we were talking about this, because of course inflation can come with supply crunches. For example, like the war that's happening in Russia, Ukraine. Not enough food is coming out, so the price of food can go up. That makes sense. But the biggest movement of all of this inflation is the mass bulk money printing that they were engaged in, especially over the last 2 years, but even before that for the last 14 years, just printing like crazy. That creates massive asset bubbles, right? But they don't want to take any blame for that, right? And it's not just pointing fingers at the US. Canada did it. Every other country on the planet did it. Just everyone was printing all together in lockstep. So when we were watching some of the Jerome Powell speeches that were happening at Wyoming, he was mentioning that we don't want it to become entrenched. You'll see in the article, it says that too, entrenched in people's minds. Because if they believe that a loaf of bread today will cost $2, but it will cost $3 next week, everyone would run out and go buy as much bread as they can today. And so that herd mentality is what they want to tell us not to do. So they're telling us, it's in our minds. And now we're even arguing if you should even have a job to solve it. Like maybe should we quit, for the betterment of the country, which also is kind of crazy. We should be able to keep our jobs, right? Maybe the government shouldn't be printing so much money, right? It's never their fault. Kind of crazy, right? So you have to take this all together in lockstep. We saw earlier in the week, they were saying it's the fault of employees because they're going and asking their employers for more money for a pay raise. And if they got a pay raise, it's kind of like not American or not caring about your country, because you getting a pay raise is what's hurting inflation. Listen, man, we got to go to the top, right? Little old me that drinks 1 pint of milk a week, I can't affect anything. But when you press a button and print trillions of dollars, like you're affecting everything, right? So we gotta look through the information a little bit, All right, so let's continue with what these economists say. I find it interesting. Hopefully you find it interesting too. The fortune.com. So they're not even sure if you should be able to keep your job, and they fear that inflation rates may be entrenched, just like I was saying. So the outcome, look at the outcome. This is the possible outcome, and I really want you to pay attention to this. These are, again, remember, Goldman and Sachs and the, was it the Federal Reserve guys or the International Monetary Fund? The International Monetary Fund, Goldman and Sachs, two massive heavy hitters. How do we sort this out? It says the outcome says there will be big implications if the hawks win, or the bulls, the ones that hope that it will go up. The Fed continues raising interest rates to combat inflation even as the economy slows, and significant job losses are all but guaranteed. Okay, if the interest rates keep going up, everyone's going to be losing their job. Okay, that's a terrible thing. The economy grinds to a halt. If the doves win, so if it goes, south, if they lower the interest rates right back down to zero again, if they win, the Fed halts or slows its rate hikes, and inflation could become a persistent issue. So if it's you have to pick your poison: high prices or job losses. Okay, so are we getting that? There is only two choices. There's only two choices: Goldman and Sachs and the International Monetary Fund. Your only two choices are raise rates or lower rates. And you either are going to lose your job and have no job and have a lot of pain, or we have to have forever inflation and maybe lose the reserve currency and even more pain as well. So it's going to hurt either way. I really wish there was an easier way around this, but we're already right on that 130% GDP. We can't go much more. Remember, no economy has ever recovered past 130% GDP to debt ratio, except for Japan. And we all know what's happening in Japan. So You guys, let's continue on, my friends, to one last thing. But now that this is happening in the US, look at this article in the conversation. The US is becoming a developing country on global rankings that measure by democracy and inequality, which at the end of the day, you guys, this is kind of sad. It's sad that this is happening, right? Because the inequality is what really pushes down the upward class mobility. Remember, the Canadian dream, the American dream, whatever it is, it's all about, can I work hard? Can I apply myself? Can I educate myself? And can I give myself and maybe my children a better life than I had? That is our main goal. But if that hope is taken away and you're just stuck at one spot forever, that's terrible. My father was penniless, no shoes, no food, starving to death, -20 outside, going to school barefoot. Brutal life. I never had it as bad, but I was on welfare myself. I could not make it. But we both live in a country where we were able to pull our socks up and be able to educate ourselves and work 80 hours a week and pull ourselves up, and that's what I want for you. It's possible here. And the countries that it's not possible, that's really, really tough, Um, so there's a few lessons from today, right? The bigger they are, the harder they fall. And I think that that is something that everybody has to remember. There is going to be more pain that is coming for sure. And so we've had a lot of comments. I got a lot of emails. And so we have people who have followed us for a long time. We have people who have followed us for a shorter amount of time. So, we always have to change tactics. So some people have written me and said, it's what you said 3 years ago isn't what's happening now. Well, you know what? Because a lot has happened. And this is where I find a lot of times you have to get a lot of information from a lot of different people, and things are changing all the time. So, we don't have a crystal ball. All we have is probabilities. We don't have certainties, same as when we're investing in stock markets and same as when we're investing in homes. I can tell you some properties that we bought based on a subway going in, and the subway didn't end up being built. They pulled that. Or that they were going to build a huge development, or they were going to build a mall there, and then those contracts were pulled. The city decided not to move forward on that. So we have to take calculated risks, right? We can't just take all of them. We have to calculate them. And as you guys know, I'm coming on here every single day to try to keep you up to date with what is happening in live time. I think one of our greatest problems that we're going to be running into is people over the next couple months here. If we have 2 more rates in Canada and the United States, which looks mostly possible, it looks like we'll have another 1.5% rate hike this year. 2 more rate hikes, maybe 0.75 and 0.75. So if that happens, all these people will be put into their trigger rates. 1 million people in the States, maybe 1 to 200,000 in Canada, all being triggered. And so when that happens, we're going to have a lot of financial pain. So that is our number one danger, because the housing market is such a behemoth in North America. The second thing that I am worried about a lot is food. So before I get to food, though, if you have a small house, you're most likely not going to be very, very in big trouble. Remember, I said the squashing, right? Low prices go a bit higher, high prices come lower. So if you're in a low price home, it's a good time to maybe bunker down, depends on the city where you live. But if you're in a large home, it's probably a time to think about selling it. If the second problem I have is with food right now, we are now in September and October. I think there's going to be a lot of problems. Why do you think there's going to be problems with food? Well, in Pakistan, completely flooded, no food. Sri Lanka, they have no food there either. They banned fertilizer, so now everybody is starving. India went to 51 degrees and they have no food. Everything died. Ukraine and over in Russia, both of those places are at war. Obviously, they can't make any food. China has 66 rivers that dried up. They don't have enough food right now. Then if you look in the United States, the entire Southwest, massive agricultural powerhouse, they have banned farmers from pulling water out, and that all like down in Texas, all over. So if you don't have food in one area, you need another area to make more of it, to bring it to you. And all of these reports will be coming out between like September and October. That is the crop season where they pull a lot of the crops off. Remember, the northern hemisphere feeds the southern hemisphere, in large part. So what we will know in the next 4, 5, 6 weeks will determine that. But if you wait that long, we should get those reports in, and then we're going to see homes prices of food go bananas. So I don't think that you should go out and get a massive U-Haul truck or RV and fill the whole thing. I'm saying every time you go out, buy an extra can, buy something. There's canned fruits and canned vegetables and canned meat and whatever. Packages that are good for a year or two, oats that are good for a couple of years. Like, buy a couple packages every time you go out just to put it to the side. You're going to use it anyway. So just stock up on some of your stuff. Anyway, I have a lot of videos on that, but listen, I think it's your number one investment right now, besides educating yourself, is stocking up on your home goods, food, cosmetics, soaps, and all that other stuff. Anyway, you guys, as you know, I'm always here. I'm always trying to help you out any way that I possibly can. Please feel free to reach out if you have any questions. Send me a DM or a message. And please, if you know anybody that this could help, just send it to one person. It would really help the channel out a lot. I really appreciate it. You guys, please remember to like and subscribe and follow to this. It really helps me out. And I guess I'll talk to you on the next video. Hope you have a good day. Hey, you guys, thank you very much for staying to the end. If you like that video, you might like this video, and you might like this one too.